Welcome everybody. My name's James Faulkner. I'm the editor of Master Investor. I'm joined today by Neal Pearson, the head of corporate broking and sales at Hybridon. Welcome to the show, Neal.
Hi, nice to speak with you again.
Good to see you. We're here to discuss
and you?
some of the candidates that have been shortlisted for the Small Cap Awards. We're not going to cover all of the candidates, but we're just going to go through some of them to give people a bit of a flavour as to what we've got in there. You can actually view the full shortlist at smallcapnetwork.co.uk, so do go and check that out. But just to kick off then, Neal, IPO of the year. You've been looking at Essensys, and this is the mission-critical software as a service platform and on-demand cloud services provider for the flexible workspace sector. I suppose you would imagine that sector's not having a great time at the moment with coronavirus, but presumably, this might have some more long-term effects on businesses as they, reevaluate whether they actually do need a fixed office space, and maybe some will actually move to using sort of flexible workspace area a bit more after this thing settles down. What do you think?
No, I think you're 100% right. It's a tricky category, the IPO one. Couple of reasons. I mean, what the panel, I think, and generally what we look for at Hybridon is really the longevity of that business model and the USP of the company. Not when you're looking at IPO of the year, you don't want one that completely rockets up, 1,000%. Wins the award and then bombs the year after. And I think the judges had a tough time with this category last year, especially because there was very slim pickings when it comes to IPOs. But looking through the list, I mean, as you said, there was a decent bunch in there, which I think kind of sums up last year, that it was very much quality over quantity. But yeah, I really liked Essensys actually. I think that was the standout one for me. I mean, that's 85 million market cap, so it's a sizable business in the small cap world. Their shares were up 36% from their May IPO to year end, so it did perform well. I also like the blend of the fundraising that they did. We've talked about this numerous times on our monthly chats before, where you have these IPOs that are a solid blend between primary and secondary. So 14 million of that
was this case, wasn't it?
Well, exactly. Yeah, it's nice to see shareholders cashing out as well and getting some reward for all their hard work. But it's also nice to see some new equity go in there as well to grow the business, because that's the whole point of an IPO. So it's a good 50-50 split, 14 million down the middle between primary and secondary.
Also,
and it had a strong
as well.
Yeah, which is I think again because there were such slim pickings last year, and when a decent one does come along, everyone's all over it, which is a nice problem to have coming from a broker's perspective. Trust me. I mean, there's a solid set of maiden figures as well. PBIT going from 400k up to over 1 million. The die-hard value investors amongst us would probably say 84 million is valuation is quite spicy for something that has those kind of numbers. But it's a high growth tech business. It's got a nice SaaS model, so you can say that they could command a higher valuation than most. And you're right. What you said at the start. I think their model is really pertinent. Was really on point last year. Providing SaaS platforms and cloud services to flexible workspace industry. That was really on point last year. It was a very tough market last year. Lots of startups coming through, lots of small businesses. And who wants to enter into a 5-year lease when you've got, the likes of WeWork and other providers? You're going to get more flexibility. Yes, it's more expensive in doing the more pay-as-you-go model, but these SMEs, they want flexibility, especially now. The whole working environment's going to change when we're all get the go ahead to return to work.
be interested to see what happens when people do start to return to work, and whether businesses decide that actually they don't, need as much office space as what they've got at the moment. So moving on to company of the year, the one that you picked out is Volex. And they are a provider of sort of mission critical applications for power products, very sort of niche specialist provider. Do a lot of work with the electric vehicle sector and data centers. So it's quite a nice space to be in at the moment.
Yeah, very nice. I like that one. I like Volex a lot. Again, it's another solid category. You get the old faithfuls like SDI and Judson Scientific, which are there, in there year after year, and it's probably one of my top two holdings in my hindsight portfolio. Of course, never been a holding, unfortunately, but yeah, I mean, those guys have done fantastically well. Consistent performers, delivering fantastic shareholder returns. But I like Volex for me because I'm a bit of a sucker for a turnaround. They're, as you say, they're an assembly of power products and a big outsourcer for many of the big electronics companies in the world who can handle their entire cabling products from end to end. That company had, I've known it for a number of years, many years of declining revenues, rising losses, but in last year was a real turnaround for them. Their interim results showed a pre-tax profit of 10 million. We saw the dividend yield come back, which had been reinstated, I think the first time in 7 years or so. And a nice blend between again, what we're talking about, the organic growth, which is good to see a business growing within, and also having a couple of acquisitions that the guys did in China and North America that enables them nice bolt-on acquisitions that really get them into more complex manufacturing solutions for their clients. So yeah, nice blend of growth there, and we hope that's the start of a long journey for them, and hopefully they've reached the bottom of that decline, and now they've got a solid base to build upon.
Yeah, also interesting to see Nathaniel Rothschild on the board of that company.
Yes, no, most of us would know him from the mining old, but he's got quite a big position in the company. So it's nice to see, again, where you have that clear alignment of management and shareholders. I think shareholders will take a lot of comfort in his involvement, given his stake in the business.
Okay, moving on to Director of the Year. You've been looking at Peter Harrison, CEO of Bioventix. I'm sure this is a company that a lot of people will have heard of. He's done an amazing job there. Share price has done brilliantly since coming onto AIM. I can actually remember tipping that company actually myself back in its listing. So yeah, one of my better recommendations.
I remember it was on Plus. Yeah, I mean that business is done incredibly well. And the executive director, I think, is an incredibly important category in small caps. Fund managers always tell me, it's really difficult to value small caps on a fundamental basis, purely based on the early stage and nascent revenues that they have. That's why a lot of these guys really do prioritize the quality of management teams, some over the financials of a business. A cracking management team can really turn a poorly performing business around, and vice versa. Mediocre management can quickly destroy a top performing company. So leadership is key in that respect. So yeah, Peter Harrison, he's that business generally, for those that don't know, is involved in creating antibodies from sheep rather than mice. They say it's more effective, and of course, what we're starting to understand now, of course, better antibodies equals better testing all around. So what we're talking about with Nat Rothschild at Volex, very much the same as Peter at Bioventix. He's the fourth largest holder, I think. Again, not incredibly cheap stock. Can't really. I think some will struggle to sell it on a fundamental basis. I mean, it's got a P of approaching 40, so quite toppy in this environment. But again, that's that's not Peter's fault. You know, he can't tell people to stop buying his shares. And again, the financials of that company are just so incredibly unique and attractive. I don't think I've seen anything like it, where there's such parity between, you know, revenues and the profit.
Yeah.
I think that the 2019 numbers had 9 million of revs and 7 million of profit, which is, you know, just incredible. And he's always got a
even though it is, like you say, a really highly valued company, it does kind of reflect the strength of the financials and the fact that operating margins are so huge, return on capital, you know, amazing. It's such an asset-light business as well, so it does reflect the quality of the underlying business, doesn't it?
No, exactly. I mean, that thing, I remember when that was, you know, moving from what was then ISDX to AIM, you know, at £6, and now it's over 40. So, you know, someone at the helm of that type of business, you know, consistently delivering shareholder value, you know, he's got to be a worthy contender, I think, for the category.
Good stuff. Transaction of the year, you're looking at Centralnik Group. Tell us a bit about that one.
Yeah. So again, another tough category there, given the lack of transactions that happened last year. Yeah, and again, I think many companies had to show an element of flexibility in the types of financing that they were going after. I mean, how they raised the money, and ultimately where they got it from. And Centralnik, I think, ticked the boxes in that respect for me, with their acquisition of Team Internet for 48 million at the back end of last year, which was the height of the torrid market. Q4 last year, they did a 40 million bond issue, which again shows flexibility, some creative thinking in terms of how they raise money. So they're in the domain of, in the space of domain names, web services space. So it's a very nice space, and got some great synergies with the business that they acquired. You know, huge recurring revenues in there. We should expect to see some of those revenues from the acquisition start to hit the financials this year. And again, 2019 numbers for Centralnik as a business were again fantastic. You know, they were, you know, revenues and earnings were set to double, underlying profit of underlying earnings of 18 million. So it's another good company with a good blend of organic and acquisitive growth.
And it does seem that so far the company's seen a pretty negligible impact from COVID-19.
Well, yeah, exactly. Yeah. That's you know, being a web services basis, you know, people have still got websites to run. So yeah, it's another, I guess, resilient business model, which is always good to see.
Okay, moving on to technology company of the year. The candidate you've been looking at is Avacta.
Yes.
And that one has been absolutely rocketing lately on the back of news that it might have developed some kind of potential therapy for COVID-19.
Yes. Yeah, to be honest, I was probably a little bit surprised that this one made it on the list, as it were. Not because it's a bad business, of course it's not. It's a great business, but it's not your classic tech. You know, your classic tech that you normally see in categories such as this are around, you know, SaaS, cloud computing, or payments, cybersecurity. And I think it was quite interesting to see, you know, having a healthcare company in there perhaps shows the kind of sentiment of fund managers last year, and certainly this year, that they're looking, you know, more into health tech, because healthcare previously was viewed as quite a specialist art. So it's good to see some generalist fund managers at least talking about the sector. So yeah, you're right. So they're in the space of predominantly, or historically, and now novel cancer immunotherapies. What that means, immunotherapy is a very topical space, especially in cancer treatment. It's around looking at supporting your own immune system to fight the cancer, you know, rather than foreign drugs. And their tech angle, I guess, what is similar to what we call a classical tech business, is they've got two platforms. You know, one of them's therapeutic, one's diagnostics. One, of course, on the antibody side, incredibly topical right now. And I guess that's when you can really spot a winner that's looking to take advantage of COVID and actually help with the effort to finding a vaccine, because it's doing nothing really new. It's just, you know, tweaking what it's already got in place. It's not just suddenly starting a new drug platform, starting a new program of drugs. And I think your Master Investors podcast a couple of weeks ago that I joined, I think it was Jim Mellon that was mentioning it. You know, it's going to be very difficult for these new companies starting out, you know, trying to have any added value in the space. You've got to look for the companies that already have the tech in place, that can just, you know, flick the switch and can get various antibodies, various drugs on that platform. It makes it highly scalable as well from an investment perspective. And those guys raised 9 million back end of last year. So they're well funded, they're saying, until 2022. So it's a very exciting time for those guys, and certainly one to watch.
Yep. Okay. Innovative financing of the year. Singled out 1PM. To begin with, just explain to our audience briefly what we mean by innovative financing.
So innovative financing is really what I was talking about earlier. So when you're looking last year, it was incredibly tough in the equity markets. So when you're looking at how companies are trying to overcome that, rather than just shut up shop and kind of say no to growth, we're in survival mode, companies started to be a little bit creative in the types of financing they were offering to institutions, whether that becomes pure debt or more of a blend of equity as well. So you're giving for example, with a convertible loan note, you're giving investors the income stream of interest payments from the debt, and also at the end, you know, they could convert an equity and kind of realize some gain around that. So it's more blended financing options that are, I guess, what you could say non-vanilla, so not just straight equity that we're all used to.
Okay, and what about 1PM itself? Tell us about what they've been up to.
Yeah, so that was an interesting one, actually. You know, they've in November they secured some new facilities to provide funding for SMEs, which is, of course, you know, crucial. It was crucial last year. It's always crucial. We've talked about the huge funding gap many a times for small companies where they perhaps you know, don't want to go down the private equity route or don't want to speak to the banks. So there was an increase in their current 7.5 million loan note, increasing that up to 25 million. So hugely flexible financing. They can offer notes on a range of terms for various investors. And you know, when you're looking at value plays right now, you know, if you've got that patience of a value investor, then, you know, 1PM is certainly, you know, should be at the top of that list. They've got, you know, 15 million market cap, and, you know, their 19 numbers were 31 million of revenue and 8 million of EBIT. So a PE of you know, under 3, which is incredible for that type of business. And certainly, you know, one to watch going forward.
Although, I mean, they do sit in the middle of that. The fact that, you know, a lot of the companies are deferring payments on loans. It does seem to be a tough environment for companies like that at the moment. Yeah, no, it is tough. I'm not sure specifically what they're doing in that space, but yeah, I mean, I guess there's always going to be flexibility around the interest payments, and, you know, they back decent businesses. So I'm sure there'll be a dialogue to have, and, you know, they're not going to, you know, cut their nose off despite their face. You know, that they want their underlying portfolio companies to grow as well. Okay. Impact Company of the Year. You've been looking at Ilika, and that's the company they produce solid state batteries. So these are kind of a more advanced version of the sort of lithium ion batteries that we hear about in things like electric vehicles at the moment. Yeah, I mean, it's an important category. I think it's something that wasn't
high priority for many investors. Previously, it was, just for ones who did ethical investing and ones who ran the SRI funds, the social responsible investing funds. But the rise of ESG, so the environmental, social, and governance, it's not just specialist investors that have to prioritize those features now. It's now really a point of focus for all funds, whether you're a specialist investor or not. And I think Ilika are really coming into their own. We're seeing rising prominence, rising attention to the battery market. Whether it be coming out of here. We've just seen Sadiq Khan raising the congestion charge up to 15 quid, 7 days a week. He's extended the hours. So we've got to look for alternative travel options. We've also seen the e-scooter trial that's been pulled forward by till I think next month as well. So rental bike market, that's only going to go one way. E-scooters is only going to go one way, I think, and also EVs as well. We know petrol and diesel cars aren't going to be around for long. And you can say I think most companies in this space tend to be well ahead of their time, and I think Ilika is no different. It's they IPO'd 10 years ago, where not many people paid them a lot of attention, but it's the battery market is especially for the IoT space. That's I think about 16 billion in 5 years' time. So it's huge amount of money that's really hopefully now going to start ramping up to a big commercial scale.
And IoT, we're talking about Internet of Things, aren't we?
Exactly. Yeah. So I mean, they've got numerous applications for their batteries. From the IoT market up to the EV market as well. They're not just focused on one segment.
And they recently raised 15 million to sort of fast track the production of a new facility for small batteries.
Yeah, no, exactly. So again, more capitalizing on the IoT market there, and it's good to see investors finally giving Ilika, I think, the attention that it deserves, because it's been under the radar for many years. Okay,
good stuff. Well, thanks for your time today, Neil. I hope to see you at the virtual awards ceremony.
Yeah, my tux, yeah.
Hopefully the bubbly that we're drinking isn't of the virtual kind, but so
won't be, no.
Great to see you, and thanks for watching, everybody.
Yep. Cheers all.
Cheers. Bye.
Bye-bye.